Hello everyone, this is Nitish and we have started a new initiative called Plums series which is Prelims Level Up MCQ series. Here we discuss daily 5 MCQs and this will help you in your UPSC preparation. Today is episode number 4 and I am dealing with Economics MCQ. Before starting this class, I would like you to please subscribe the channel and also like and comment on videos. These contents are free of cost, so for test series and foundation video, you can contact to Vysh sir on WhatsApp 7200 So let's begin. Today's MCQ number 1. The concept of invisible hands in relation to an economy entails which of the following? So here you should know what is invisible hand. Then you can able to answer the following options. Option number A. An unobservable market force that helps the demand and supply of goods to reach equilibrium automatically. Option number B. Unregistered firms in a market which destabilizes the market equilibrium by distortive price policies. Option number C. Invisible role of government in controlling the production of goods to maintain the market equilibrium. And last one is the distortion in the demand supply curve in a market due to hoarding and black marketing of goods. So I will give you 10 seconds. Try to answer this question or write it in the comment section, the answer. And after 10 seconds, I will give you the answer and explanation. So its answer will be option number A, an unobservable market forces that helps the demand and supply of goods to reach the equilibrium automatically. So let's see the explanation. So from the term itself, individual hand, what we can infer? So basically indivisible hand, which means that the unseen forces, the forces which we cannot see, that helps to move the free market economy where self-interested individual operate through the system of mutual interdependence, which means that invisible hand is nothing but the unseen forces and it helps to move the free market economy. Now, we let's see the definition of individual hand, that it is an unobservable market force, which means that the market force which we cannot absorb. From the term itself, it becomes clear, and that is the option number A. The invisible hand, the phrase invisible hand was introduced by Adam Smith in his book The Wealth of Nation. This is the extra information which I put so that you can make notes and it will be very helpful for your UPSC prelims examination. Now, move on to MCQ number 2. The factor cost of good includes which of the following? So, in order to answer this question, you have a clear concept of what is factor cost. Then only you can able to answer this question. So, let's see the statements. Payment for raw material is the statement number 1. Wages to labor for production is the statement number 2, and taxes. Now we look at the options. Option A is 1 only, then 1 and 2 only, 1, 2 and 3 only, and option D is 1 and 3 only. I will give you 10 seconds, try to answer it and write it in the comment section. So the answer is B, 1 and 2. So now let's see the explanation. Before moving on to the question, first we should know what is factor cost. So factor cost is nothing but the payment to factor of production. And we know that factor of production is nothing but the land, labor, capital and entrepreneurship. So whatever payment we made to the factor of production, that is called as factor cost. So it does not include any taxes, because if it include tax, it means that it is market price. Here we should know that there is a difference between factor cost and market price. In order to arrive at the market price, the factor cost need to be added with the total indirect taxes less total subsidies, which means that total indirect taxes minus total subsidies will be added to the factor cost, then it will give rise to market prices. So the taxes will not be included in the factor cost. That's why the option B is true. Now move on to MCQ number 3. Other things remaining unchanged, market demand for a good might increase if, which means that if everything remains neutral, then the market demand for good will increase. Then what are the conditions in which the market demand for the good will increase? So the statement number 1 is price of its substitute increases. Number 2, price of its complement increases. The good is an inferior good and the income of the consumer increases. Its price falls. Then which of the above statement is correct? You have to choose the correct statement. 1 and 4 only, 2, 3 and 4 only, 1, 3 and 4 only, and D is 1, 2, 3 only. I will give you 10 seconds. Try to answer this question and please write it in the comment section. So its answer is A, 1 and 4 only. Now look at the explanation. The following are the relation between the demand and the price of product with other factors remain unchanged. Now we will look at the statement number 1, that is, if the demand for a good may increase if the price of one of its substitute rises. Means if the price of its substitute rises, it means that the demand of a good will increase, and vice versa is also true, which means that the demand for the good may decrease if the price of one of its substitute falls. Now the statement number 2, the price for a good may increase if the price of one of its complement falls, not increase, because in the statement it is given that the price of its complement increases. That's why the statement number 2 is wrong. Why? Because the demand for a good may increase only if the price of one of its complement fall. For example, ice cream and hot sauce. Now look at the statement number 3. The demand for an inferior good may decrease if the income increases. So it is a basic, because if a person's salary will increase, then why he will look for the inferior goods? That's why the demand for an inferior good will decrease if the income increases. And the statement number 4 is if the price of good falls, then its demand increases, then it is an automatic thing. If a commodity's price is reduced, which means that its demand will automatically increase. So statement number 1 and statement number 4 is true. That's why the option A will be right option. Now look at the MCQ number 4. Which of the following are the intended benefits of strategic disinvestment? So here you should know what is strategic disinvestment. Otherwise, you will not be able to answer this question. So statement number 1 is meeting budgetary requirements. Number 2 is reduce fiscal burden. Number 3 is raise funds to finance growth and development projects. Statement number 4, improve market competitiveness and discipline. And statement number 5 is transfer of commercial risks. Now we look at the options. Option number A, 2 and 3 only. Option number B, 1, 2 and 3 only. Option number C, 1, 2, 3 and 5 only. And option number D is 1, 2, 3, 4 and 5 only. So I will give you 10 seconds. Try to answer this question and write it in the comment section. So the answer will be option number D. It means that all the statements are true. So I would like to draw the attention that if any one of you don't know what is strategic disinvestment and thinks that it will be very difficult for you to solve the question, then only please watch the video so that you can able to eliminate the answers in the main exam, which means that the preliminary examination in the main day. So it is very important you should know how to eliminate the statements, or from the MCQ itself you can get a crux of what is strategic disinvestment with the help of explanation. So let's look at the explanation. So what is strategic disinvestment? Strategic disinvestment is the transfer of ownership and the control of public sector entity to some other entity. It is basically given to the private sector entity. So from the term itself, you can understand what is the idea of strategic disinvestment. It means that the public sector entity's ownership or control is given to some other entity. So its benefits are many. Point number 1 is to meet the budgetary needs, means for budgetary purpose, you can make strategic disinvestment. The point number 2 is to reduce fiscal deficit. Point number 3 is to improve public finances and overall economic efficiency. Point number 4 is to diversify the ownership of PSU for enhancing efficiency of individual enterprise and so on. So you can look at the explanation and try to maintain a copy or a note so that it will be very helpful for your UPSC prelims examination. Now we move on to MCQ number 4. Sorry, MCQ number 5. Which one of the following statement is incorrect? So here you have to find the incorrect statement with reference to gross fixed capital formation. Now the statement A is its measure only the value of net addition to fixed asset. Statement B is it includes only those assets that come into existence as a result of a production process. Statement C is it excludes land purchases and depreciation. Statement D is fixed asset in gross fixed capital formation includes tangible assets but excludes intangible assets. So I will give you once again 10 seconds and try to answer the question in the comment section. You have to here find the incorrect statement regarding gross fixed capital formation. So the answer will be option number D, which means that the option number D is the incorrect statement regarding gross fixed capital formation. Now we will look at I will see you the explanation. Statement A is correct. So you should know why the statement A is correct. Statement A is correct because gross fixed capital formation is the net amount of fixed capital accumulation, which is called net investment. It measures the increase in capital stock less the disposal of fixed asset. Thus, gross fixed capital formation is not a measure of total investment, as only the value of net addition to the fixed asset means whatever the fixed asset you have, the net addition, the value which we add to this fixed asset, that is called gross fixed capital formation. That's why the statement number A is correct. Now we look at the statement B. Statement B is also correct because gross fixed capital formation, also called investment, defined as the acquisition of produced asset including the production of such asset by producer for their own use minus disposal. The term produced asset means that only those assets that came into existence as a result of production process. Means what is the produced asset? Produced asset is nothing but those assets which are in existence due to the result of production process, that are called as the produced asset. So now look at the statement number C. Statement number C is also correct because GFCF, which means gross fixed capital formation, does not include the purchase of land and natural resources and depreciation. And last statement D, which is incorrect because the fixed asset in gross fixed capital formation includes tangible or intangible asset produced as output from production process that are used repeatedly or continuously for more than 1 year. So here I have completed the episode number 4. Next episode will be tomorrow. So please subscribe the channel and stay tuned. I hope you liked the video. So thank you.